Good morning. It is Friday, January 11th at 10:07 a.m. Our goal to be done by 10:59 a.m. Central Time. It's about 20 degrees here in Wisconsin, and next week I will be in Florida, Hollywood Beach, starting on Tuesday until Thursday night, and then heading down to the Keys. And on Wednesday and Thursday night, if you happen to be in the Hollywood, Florida area and you'd like to get together, there will be a group of investors from Avi Gilbert's service, who I'm partnering up with him on something real soon. And at Margaritaville, about 4 in the afternoon on Thursday of next week, which would be the 17th, right? The 17th. But I'm staying at the Costa Hotel. So if anybody wants to come up to the rooftop on the 15th or 16th, I am fairly certain I will be there both days at their rooftop pool and bar around happy hour. So if anybody's feeling happy, just shoot me a message on any service that you can get a hold of me on. Twitter, doesn't matter. I'll look at all of them at some point. But at the Costa Hollywood Beach Hotel or resort or condos or whatever it is. But we'll be hanging out there. So anyway, new endeavors, old endeavors, many endeavors. As you can see, I am building a brand new website for my investment firm. Sustainable investing in a changing world is the catchline. I have decided to move my investment firm in the direction of being a sustainable investing firm because I do think that that is the trend of the future. So we're going to focus on solar, alternative energy, smart grid, really everything to do with the smart everything world, because sustainability ultimately is going to come with major technological revolution in agriculture and water, smart buildings, smart cars, EVs, automation, artificial intelligence, all of that good stuff that I covered in that article a while back titled "You Can Get Smart Rich in the Smart Everything World." And just, was working on this last night with a local webmaster guy, and I'm going to do a nice voiceover on this. I think I'm getting, I'm going to get a celebrity to do it. And actually, he's a local celebrity who goes by the moniker Fireman Jim, so he's not exactly national. But I wanted to get Earl Jones or something, but I probably can't afford him.
Morgan Freeman.
Yeah, Morgan Freeman. Yeah. You should invest with Kirk because he's sustainable. But anyway, if you get a chance, take a look at the website. It's still in development. Hopefully a soft launch on Sunday. Windmills, pretty cool. Not killing any birds, I promise. They're slow moving. They're not the fast ones. But I put in the mission statement here. 3 services I offer: financial consulting, investment management, and alternative investments. Have the blogs, reports, and letters here that'll be live, and you'll be able to pull up more and more of them. These are a bunch of the old ones. I'm going to probably delete these last 2 just because they're very old. But in any case, then we have the video page and a portfolio. So not only will my YouTubes be up here, but anytime I do an interview, we're going to build the portfolio. And I think I'm going to change this to 12 on a page. Getting closer to launch. Seeking Alpha articles. I don't know if they're here yet. No, they're still stuck on the front page. We got to move those. And I am not in London. I wish I were in London. Maybe during the summer. Not right now. In any case, why is this important? Because it's coming, and we can see all the different trends towards the sustainable future. And AI and automation, alternative energy, smart grid, man, are they going to be huge in the next decade? So we're trying to uncover some of those companies now. And Dave, do you have a SWOT report on First Solar ready to go, or is that one of the ones that you're working on right
It's
now?
what I'm kind of in the middle of right now.
Okay.
So,
So Dave is keeping me on my toes here. He's told me to live on coffee because I am not keeping up with the amount of work he's putting out. But we will go to something that he probably did, 3/4 of the work on, and in a second. But let's talk about the sustainable future just for a second, and then we'll move into the unsustainable future that we have a current trade going on in oil. We're going to talk a lot about actual investments today, not so much theory. And I'm going to bring up First Solar. Here's a company that we, I told people in the last, 2 weeks, Dave, 3 weeks, folks.
right.
I was telling everybody to start buying this stock that was down closer to 40, 41, 42. And we have gotten positive divergence on MACD. We have gotten the ramp up in money flow off of that bottom, and price followed, right? See? Price followed. Price didn't lead. Money has to go in first. Then price followed. So, not overbought yet. So if you want to buy it, I think that right now you probably sell some puts, or if you want to wait for it to bounce off, an overbought signal. But honestly, I don't know that it's going to come down too much for you. I think that we're at closing in where these averages are going to turn back up. If we don't get the stupid trade war acceleration, I think we're in good shape for the first half of this year because the Fed is talking about all these things that they're semi-worried about, so they're going to back off for a while. I don't know. We've talked about in the last couple of weeks that it would be sure nice if they would dial back some of the quantitative tightening, and I think they will do that if they see any smoke at all. If the Fed sees any smoke at all in the economy, burning oil or whatever it's going to do, they're going to pull back on quantitative tightening. So I do think that there is a Powell put in place. I think it's right around that 21, 22, 2300 level on the S&P. I showed the chart a while back, and I should probably just show it over and over again. There's massive support on the S&P right around that 2200 plus or minus 100 points. And we got down to 23. What did we get down to, Dave? We get down to 23. 2350, 2343. I forget what the exact low was, but we really basically hit the top of the support range, and the S&P's been bouncing off it, and a lot of stocks going along with it, right? So what we don't know yet is how long will this money flow be positive. My speculation is through the end of the first quarter for sure, and then as hedge funds get their new money in, probably through the second quarter. And I do think that there's a new seasonality that is playing out here. And we'll know over the next several years if I'm right about this, but I'm pretty sure I'm right about this. It used to be that the best months in the market to be invested were from November to April, right? The buy-in, I forget what the buy was, but it was sell in May and go away, right?
Right.
And it was buy after some October holiday. I don't know if it was a Jewish holiday or Halloween, or it had to do with, I don't know, something in the fall. But in general, November to April were the 6 months where, and there's studies on this, where it showed that you made like 85% of your total gains for the year historically. And if you got uninvested and just went into bonds May through October, then you'd actually maximize your gains, presuming you're an indexer. And not, trading or trying to buy higher quality stuff than the index. But what I think is going to play out, and I think the fourth quarter is going to be, at least about half the time, the fourth quarter is going to be pretty rough. And the reason for that is you have downtrend in oil, which almost always happens that time of year after the driving season. Then you get the builds in crude. You get the hedge funds that failed that have to liquidate. And you really just are starting to run on kind of a low tank at the end of the year before the retirement plan money hits back in the first quarter. So I think that the seasonality is shifting so that in volatile years or down years in particular, the fourth quarter will really sell off because of everything, including on top of the hedge funds selling and a little bit of weakness in oil, which really is a big deal in the markets. I think you're going to see some fourth quarters that, you get tax loss selling too, and you're going to have some rough fourth quarters like we had just this fourth quarter with December falling off a cliff. But then I think the first quarter is going to remain an incredibly strong quarter. And I think second quarters, as institutional money, particularly hedge funds, filters back in, right? There's this recycling that goes on with hedge funds, that the crummy ones wash out in the fourth quarter, and then new ones raise money in the first quarter and get invested by the second quarter. I think you're going to see the seasonality change just a little bit some years. And I think the correlation will be in the choppy or down years, fourth quarter probably be really bad. And in the good years, the fourth quarter probably holds up pretty good because the hedge funds stay in. So, keep that in mind. Go back to the article I wrote about the missing pieces of money, the buyback articles, because I think those are important. We have to keep measuring money flow. And there's going to be periods where we see money flow just deteriorate. Let's just go to SPY here for a second. So SPY bottomed out over here, 233. Yeah, so 2337 on the S&P. Yeah, 2337. So that's pretty low. That was really close to that support level that I've talked about over and over again. Now, let's pull out some longer charts. Let's look at it weekly. And I usually don't use 20 weeks. I usually use 26 because I think 6 months is a better oscillator. But you saw how the money flow headed down all year. And this is a pretty historically low level that we're at, right? So you take a look at money flow, bottomed out there, bottomed out there, bottomed out there, bottomed out there, then bam, then really bottomed out. This is a really low number for money going into the money market. This really was this was a legitimate capitulation, folks, right there. That is a legitimate capitulation on December 24th, I believe. Well, this says December 21st, but Christmas Eve day. We have a 600-point down day and a half a day. Yeah, so that's a legitimate capitulation. We're coming back. We don't quite yet have a positive divergence here, but it looks like it's closing in, right?
It looks like might be forming a reverse head and shoulders.
Ooh, reverse. Tell us about a reverse head and shoulders.
See, you do have a left shoulder there, right before the big dip there. The big dip is the head. So it looks like you might see a right shoulder. So we're going up, and we'll probably dip down a little bit, and that'll probably form a right shoulder.
So like today, our little dip today?
It's possible. I mean, it could go higher up. See where the 50-day moving average is. We might go up there. Okay. That's where the kind of the neckline is there.
I didn't know that you talk so much technical.
Yeah, I usually don't, but I'm getting into it a little bit.
All right. Well, it's very sexy. All right. So something I'm going to mention to folks who are out there trying to figure out when to buy and when to sell. The day traders generally establish positions in the morning. And then you also have your people who are emotional the day before, or they put in a trade because they need money. Those trades usually get executed in the morning too, usually selling pressure. Sometimes there's FOMO, right? Sometimes people are chasing the market up and they put in there, I got to buy it, or I'm going to miss it. But the morning is generally for traders and amateurs. And the last hour or two of the day is when the professionals and the institutions come in and say, okay, how do things look here? How do I want to establish my positions? What do I want to take off? What do I want to put on? So the end of the day to me is a lot more important than the start of the day. But the start of the day does tell you about the emotions in the market. So, Avi Gilbert was writing those Sentiment Speaks articles on Seeking Alpha that for whatever reason, Seeking Alpha isn't real supportive of technical trading, and they should be, because over the years, I have this 4-piece process, which is Take a look at the big secular trends, which is why I'm getting into the sustainable investing, because I think it is the major sustainable trend out there, major macro trend. Then you take a look at government and central bank policy, which we've talked a lot about lately because of the trade and because of the Fed. Then you go to the fundamentals and understand which sectors are financially strong, who has good balance sheets, who has growth, who has the CapEx cycle on their side, interest rates and what they have to spend. And then finally, you go to the technical or you go to the quantitative. Now, I favor quantitative. I use these charts because it's illustrative of a quantitative factor here. And I have learned over the last 25 years that the price trend analysis takes into account two things that are very important. One is consumers or investor sentiment, right? So we look at the surveys from AAII or whoever we're looking at, and investor sentiment, I think, is very. Am I talking really fast? This coffee's really kicking in, isn't it?
No, I think you're good.
I think okay. So
yeah.
I'm looking at the clock. I'm still trying to get to 10:59. Now I just wasted a minute. But the technical and the quantitative analysis, I think, really helps us with the entries and exits. We screwed a trade up in the fall. There's no doubt about it. We should have got the hell out of the way a lot more than we did. We went into the fourth quarter with cash and with puts. And we sold the puts too early, and we invested the cash too soon. And now we're making our money back. But we could have hit a home run in the fourth quarter. And I as a former baseball player who can hit a slider, which means I'm really arrogant, it pisses me off that we did not hit a home run in the fourth quarter. Right, that's like going into a game with a meatball pitcher, and you got your bats, and you had your Wheaties, and you swing and miss 4 times. Then you finally get on first base, and you're like, well, Jesus Christ, I'm just on first base. And we should have hit a home run. So we're going to hit a home run at some point, but you have to wait for the fastballs that you can handle, right? Swinging at curveballs and breaking balls and off-speed stuff, that's hard. That's why I tell people stay away from the middle of the market. Wait for these capitulations. Wait for these big sell-offs. And you probably are much more likely to do something that is really impressive for your portfolio. In any case, let's go back to First Solar. You see, that's not it. That's not it. That's it. All right. So we have this upward divergence. Let's take a look at their weekly. What does their weekly look like? All right. So they bottomed out earlier in the market, and they've come back, right? But they still haven't gone positive on money flow, just barely getting that positive long-term divergence on the MACD. I think that if the market is as positive this year as I think it's going to be, and did I drop this last week? I do think we're going to crack 3,000 on the S&P this year. And I think it might even be in the first half of the year. I think that's how big of a first half rally we could get. Again, if the Fed doesn't go crazy and the trade war doesn't accelerate, right?
Mm-hmm.
So those are the caveats over and over and over again. I hate saying them but if I don't say them one time, somebody will say, well, what did you said that it was going to go up? But there are caveats, right? I mean, if the trade war gets stupid, then this stuff could all reverse. So we are not on super solid ground. But I tell you what, they come out with a trade deal with China, and I kind of think they're gonna, because I think that Trump needs to win, and I think he'll soften a little bit.
Mm-hmm.
I think you see a lot of these breakouts, just bam. Especially, what are alternative energy prices stocks correlated to? Oil, right? So as oil gets more expensive, alternative energy generally goes up as well. So I think that First Solar, if you don't have a position in First Solar and SunPower, and granted, you may have missed the bottom here. This one's jumping off too, not quite a positive divergence yet. Certainly not overbought. It's got a lot of ways up to go. I think that you spend a number of months, maybe several quarters, gradually nibbling in on these two stocks. These two stocks as a pair, you want them both, because First Solar is the utility leader, right? They build the solar farms for utilities. Then SunPower is the leader in commercial, and they're going to be one of the leaders in residential as well. So, we've talked a little bit about one of their partners, Enphase, for their inverters. Yeah, and there's several opportunities out there. SolarEdge, we take a look at SolarEdge and Enphase doing things a little different, but still part of the same market. Maybe those two you buy together too, because we don't know which one is going to win. Take little positions and build them up over time. Make sure you get to know their, really understand the companies, so that when something breaks, you'll understand what's going on, and then you can either, increase one position and then eliminate the other. But right now, I don't think we know the winners. I just think we know the market, and you want to kind of have some buckshot, not rifle shot. So, some of these companies you want, 0.5%, 1% in your portfolio. First Solar has this great balance sheet, so I actually have made them a bigger position. They are one of my core positions. SunPower is one of my biggest spec positions, because I think it could go to 100 someday. First Solar, I think, could go to a couple hundred. Something to keep in mind about stocks that we pick out. If it's a value-oriented dividend stock, we still want to see a double, about a 15% average rate of return over a 5-year period. But for our growth stocks, we're looking for better than that. We're looking for 22, 23, 24, 25%, maybe 35% average returns. And we know that that's not going to happen with every one of them, right? But if we aim really high with our growth stocks, we don't need them all to double and triple. Some of them can be flat or even lose 50%. But if we have a handful that really end up being multi-baggers, because that's what we're looking for on the growth side, we can do really well. And the stock that I always point out is the one that did it for me, right? Wiped out all kinds of mistakes and all sorts of things that didn't work out. Let's just use the fundamental chart. Right, so Exact Sciences is a company that I invested in way down here. Should probably, I was buying it about a year earlier. I was buying Exact Sciences at $1.65. I didn't have the guts to buy it under $1, but then on this little run, I started to recognize what was going on. I was a big buyer in here, and I was a big seller in here. I started buying at about here, and then it fell off a cliff, but then I loaded up on leaps down here. This is a pretty good place to load up on leaps, right? I understood the company. I knew that this was a mistake by the market, and look at that. I sold most of my Exact Sciences around 60, 62. I've been selling puts here and there on some of these big dips. I sell, well, that one. I've only sold puts twice since I sold the stock over a year ago. And right now, I think they're hitting a triple top. So I wrote an article that people should be taking their profits on Exact Sciences. I will repeat that. If you have not taken your profits on Exact Sciences, I don't expect a giant breakout here. Not yet. I think it's going to jitterbug for quite a while. And honestly, it seems to me that they're packaging that company to be sold. I could be wrong about that, but Manish Arora left. That doesn't make any sense to me. So that means that he thinks there's a different opportunity for him. And, this made him a multimillionaire too. So, when one of the two big guys leaves the company, the guy that you thought might become the CEO someday, the guy that's clearly CEO material leaves, you go, why wouldn't he wait this out? So I think that Exact Sciences, I think this was it. This was the big deal. Does it mean it's a bad company? No. I just think that the multi-bagger opportunity has happened. It's happened twice. I made a 10-bagger here, lost about a third of my money because I, again, reinvested too soon. Need to focus more on the technicals and the quantitative data. That would tip me off better. I just looked at the lines. It's like, okay, this is about where I can start buying it. Oh, down 75%. Hey Dave, what do they call a
Mm-hmm.
stock that's down 90? What do they say? Yeah, what do they call a stock that's down 90%?
One that kills you. I don't know.
Yeah. Well, it's a stock that went down 80% and then loses half
Mm-hmm.
again. GE.
Yeah. Oh, yeah.
So, just because the stock's down 80% don't mean that it can't go down another 50. I have learned that lesson the hard
Mm-hmm.
way
Yeah.
several times. And I will tell you folks, avoid that lesson. Just take my word for it that you need to be more careful in areas like this. Right? Well, it's got to be done going down. Not necessarily. A lot of times when stocks gap down, that's a very good indicator it's going to keep going down. And I mean, granted, this went down in like a week, so it just sometimes it moves so fast there's nothing you can do about it. But I shouldn't have been buying as aggressively in here as I was. In any case, First Solar and SunPower, I think you should be a nibbler. And I want to show you guys some research. This is going to be a standard thing at margin of safety investing in fundamental trends. Fundamental trends has been a little bit behind for the last month because we're in the middle of a rebuild over there. Hopefully, it was supposed to be up at the end of the year. And my engineering team has run into some issues. And I've got a real company out in India doing it. So they don't get their last check until it's done. So I suspect it'll be done in the next couple of weeks. So we should have a soft launch of the Fundamental Trends new website by the end of the month, and then we'll start marketing it in February or March. But so Google, one of the backbones of the research we're doing, and we're just going to do simple. They're not really simple, but we're going to do SWOT reports. What is a SWOT report? Somebody actually asked. I didn't know that everybody didn't know what this was, but what does SWOT stand for? It is strengths, weaknesses, opportunities, and threats. And there you go. That's what it is. And we need to make it bigger. Ooh, look at that. So strengths and weaknesses are generally internal, right? This is the strengths of the company. This is the weaknesses. The opportunities and threats are external, right? So this is where they could take the company, and this is what could break the company. Wow, that was pretty good, Dave.
Yeah, nice. I like it. Yeah.
You like that? I like that. So this is going to be the backbone of a lot of our research is to do the SWOT reports because we want everybody to just understand really what the companies are all about. So with Alphabet, I think that people need to understand that the baby Googles are coming. What are the baby Googles? These are the baby Googles. Look at all the little baby Googles. Look, they're so cute. So, there's a lot of companies that Alphabet owns. And the reason that they created Alphabet, right, because it used to be called Google, is they created Alphabet because it's a holding company. So everything on the right half of the page here is probably going to get spin off at some point. Now, the R&D lab, I think it stays with Alphabet forever. But they'll just keep repopulating this area here. Now, remember, they bought Nest a couple of years ago for smart home. Going to be a big deal. Waymo, the autonomous vehicles, going to be a big deal. Access, I still think it makes sense for these guys to sell this and or merge it. And I think the perfect merger partner for Access, which used to be fiber, and they've changed the structure. This should be part of CenturyLink. I think that Alphabet should go to Excuse me. This is why I'm leaving Wisconsin in the winter. I think that Alphabet should contact CenturyLink if they haven't already, and they should say, hey, let's figure something out here. We have this super fast fiber. You guys have the second or third biggest network in the world for fiber optics. And we'd really like to get into the enterprise side of the business because, hey, we have something that's ready to take share from Microsoft, right? So I think that they're going to make a push into the enterprise market. It's even bigger than what they've done. And I think CenturyLink could have something to do with that because they're big in the enterprise. So we'll see. DeepMind, artificial intelligence. Every woman I've ever dated said that I need more of this. Verily on the healthcare side, all these could be, almost all of these could be their own company, right? So I think that Nest for sure spins off. I think that Waymo for sure spins off. I think for sure this merges or spins off. The AI, I don't know if they, I don't know. And I don't know where the quantum computers are housed right now. I think they're in the R&D section, right? So they don't talk about that very often. But they bought DeepMind, and they're really pushing into AI. Probably a top 10 company in the world in AI, if not the top. And then the quantum computing is going to be incredibly important when they figure it out. And what is quantum computing? Think about the speed that your computers and your cell phones move now, and multiply that by 100 or 1,000. They're going to be that fast and that able to use neural networks and everything else that they're going to use with their AI that we will eventually have our Skynet moment where we have to make sure we protect ourselves. But these computers are going to get so good, probably within a decade, if maybe 20 years out, but it could be 2 years. Who knows? There's always some smart guy somewhere who figures something out that nobody thought could be figured out. There's a guy in California from Stanford at New Lights who figured out how to turn methane in the air, just pull methane out of the air and turn it into plastic. That's going to be really bad for the petrochemical companies eventually. You got this other guy who was the guy at 60 Minutes the other day. What did he invent? Anybody watch 60 Minutes the other day? Oh man, I can't remember. Somebody look up 60 Minutes and see the inventor piece and let us know what it was. Yeah, somebody just put in the chat, you said 3024 on the S&P. Yep, I'll stand by that, and I think it might even go a little higher. In any case, baby Googles, they're coming. This is the type of research you get at Margin of Safety Investing, and this was posted at Fundamental Trends. We really dig pretty deep. And some of the opportunities that Google has and Alphabet, it's just unbelievable what they could be. They literally could spin off a half a dozen companies or do strategic mergers, and they'd all end up being S&P 500 size companies, right? They'd come out, they wouldn't be in the index, and then they'd get put in the index. So you get that double pop when it's added to the index. And I think that's something to keep in mind. Again, Alphabet, it might not be, it's around $1,000 right now, $1,100. It might not be a $5,000 stock in 5 years or 10 years, but the combined value of the spinoffs makes me think that it's at least a triple in the next 5 years. And even if it takes a little longer, right? Let's take a look at Exact Sciences. So let's use some of the stocks we've talked about already. Here's First Solar. It just hasn't done much long term so far, right? You had that spike early, but look, this is about where it started. It's about where it is now. So you take out of this, right? You take out that craziness, and it's just been chopping along for a decade. Take a look at Exact Sciences. Same thing, chops along for a decade, bammo. I think that's what's going to happen with a lot of the alternative energy, sustainable, smart AI types of stuff, right? You got to find these companies that have been chopping along, building a base, getting market share, and all of a sudden they have their big thing, right? So this is announcements, FDA and Medicare, and then there's some quasi-government agency that said something stupid and ambiguous. The shorts drove this stock down because it wasn't terribly liquid, and then there was clarity, and bam, to the races, to the point where I think they set some record for amount of tests that they do. This is a diagnostics company. So let me ask you a question, folks. If you owned a stock for 15 years and you had bought it for 10, and now it was 80, in 15 years, would you be okay making 800%?
Mm-hmm. Yeah,
even though, right? Even though for 10 years you made nothing. So that's the power of long-term investing, and that is the power of knowing that your ideas are good. Now, you can chop along and say, I just don't have any idea about the future, and I just want my 4% dividend and 2% growth. That's fine. There's a lot of those out there. But there are great ideas out there, and small positions can become great. And if we can put together some sort of trading acumen, on those rare occasions when to buy leaps, you can make a lot of money. All right. So let's buzz through some of these things. I think Google is a core portfolio holding. I think that if you don't own it, you're silly. Just because it doesn't pay a dividend doesn't mean it's not a value stock. Alphabet has $100 billion on the balance sheet, or $118 billion, whatever it is. They're a value stock. They buy back shares. They invest in the future. Some of the other companies they spin off probably will have dividends, but you can always sell a share if you need money and you get a capital gains rate. If you need to do it that way. But Alphabet is a value stock and a growth stock. Just because it doesn't pay a dividend doesn't mean that it's not a value stock. Alphabet certainly is, in my opinion. Now, that's rare. Most value stocks do pay a dividend. Every now and then you get one that doesn't. There's this little company in Omaha that does not pay a dividend. And I would challenge anybody to argue with me that Berkshire Hathaway is not a value stock. Right, Dave?
Correct.
Clearly a value stock. They're sitting on, I don't even know how much money he's got. He's got over $150 billion at this point, doesn't he? Just waiting. Although I think Berkshire Hathaway, the value company, was just buying another one of our core holdings, and it just became a core holding, Apple. Apple is clearly one of the top value stocks out there, and they're going to have major growth in the smart world too, because they have 15% penetration into the global market via their handsets. All they have to do is replace them. They don't even need new business. But the people that own iPhones are among the most affluent people in the market. The people more likely to spend some money on a smart home or a smart car or a smart entertainment system or a smart security system or smart utilities or smart solar on their house, right? So the fees that they're going to be collect from the services they provide, whether it's Google or Apple, or I was in Samsung store this summer over in New York near the High Line. There's pretty neat stuff coming. So Google is in on all this stuff. You want to own Alphabet. All right. So we're going to switch gears. In Hollywood, there's a casino called the Hard Rock. And I, as a lot of you know, play a lot of poker. And I don't play as much poker as I'd like to because I'm doing my real job. But I'm a very super low-level pro. But I'm probably just a really good amateur. And because I don't put the time into it. But we've seen some news here in the last week. Carl Icahn building a stake in Caesars. I've talked about Caesars and MGM in the past. And MGM is getting some investors too. Why is that? It's because they got beat to heck. Here's Caesars. Bam. And what do we get? Positive MACD divergence. Positive money flow. This is probably all Icahn buying. So you probably get a little pullback. But I will tell you this, between Caesars, a little bit better on the book value, and that's because their properties in Vegas are better. I'll tell you, I just spent 3 weeks last June in Vegas playing the World Series of Poker, and comparing Caesars properties to MGM properties, I'm telling you, the Caesars properties are better. Period, hands down. Caesars has better properties than MGM. Not that MGM has crappy properties, but location, stage at the remodelings that they're at. Amenities. The fact that Caesars is smart enough to put, cute girls on tables dancing when you're gambling, because that might distract you a little bit, and you don't hit freaking soft 16 like you're supposed to against a 6 or against a 7. Yeah, whatever. I don't know. I made that up. My girlfriend's a better blackjack player than me, but I can play some poker. And Caesars, I just think, is probably a buy the dip stock here if you want some speculative money. Why? Because their asset values are pretty good. And I don't know that we buy it right now, right? But I think this is on our watch list all of a sudden. I like Caesars. And ultimately, with Macau and gambling around the world, because we're going to get another loose money phase, right? I mean, this little tightening that we're doing, I'm almost telling you, it's for show. We can't have tight money because the aging of the population. The only way to keep the global economy growing is to have loose money for the next 30 freaking years. And I know people say, well, you can't keep borrowing money. If it was a household, it would go bankrupt. Yeah, well, the world isn't a household. Okay? So all those comparisons, man, I drank a lot of coffee today. All those comparisons about, well, you wouldn't handle your home's balance sheet the way that, that way, would you? Anybody says that, slap them across the mouth a little bit, just a little playful slap. You don't really hurt them. But the global economy can't grow on the way that it has in the past because the demographics don't agree with it. The population's getting older. We have huge healthcare problems, as far as affording it. So that's why I speculate there's going to be a huge, even a huge bear market in healthcare stocks at some point, because they're going to squeeze the margins on those companies so tight that they're going to fall off a cliff. And in the meantime, the loose money will pop up and will support the sustainable everything world, because that's where the growth has to come from. If you can't get natural organic growth, what do? You grow something. Okay, we're going to plant a solar farm, grow it. We're going to plant a smart grid. Hey, that's the whole freaking planet. Let's redo the whole planet's grid. Hey, let's do electric vehicles. Hey, let's do automation because we don't have enough young people that want to work in a factory. Hey, let's figure out a way to do this with healthcare. Whatever the case might be. We're going to have to create growth because we have to change the way the world is working, just in case, and just in case climate change is real. It's real. We probably should be fighting that. So that's going to be major changes too. Ultimately, and I will throw this one out there for a future short, the United States is going to ban the export of coal eventually. There you go. Mark that one. 52 minutes, whatever we're at. The United States will ban the export of coal eventually, and that'll be it. That'll be the signal that everything is about to change rapidly. When does that happen? I think by the early 2020s. I think by the early 2020s, we announce a plan to stop exporting coal, and I think we announce a plan to get rid of coal-fired power plants. And I think it all happens before 2030, or by about 2030. So keep that in mind. And that is why I am doing this, because it's going to happen. All right, back to the gambling. Maybe I'm gambling with this, but I don't think so. I think this is a very smart bet. Keep an eye on the casinos. And I think if we get a pullback, we have to really evaluate what these companies are worth. And what is that going to start with, Dave? What do we have to evaluate with these guys? What do they own that we need to know what it's worth?
Casinos.
There you go, the real estate. Yeah, right. So what are these casinos really worth? Well, Vegas is adding a football team, and was it the NBA or Major League Baseball that just talked about expansion? Might have been both of them. But eventually they're going to have an NBA team too, and I think they're going to have a Major League Baseball team. Why? Because you have got an awful lot of people there. And it's going to be a unique venue. If you're the home team player, you're just going to feel like you're on the road almost every week because people fly in to see their team in Vegas, right? So when the Packers play in Vegas, I'm going to go to Vegas, right? And when the Giants play in Vegas, all the people from New York are going to go to Vegas, right? So it's going to be a unique market, but it's coming. So between Caesars, which I think is a little bit better properties, a little bit better balance sheet, more debt, better book value, I think better cash flows. I like Caesars. But MGM is right there. I mean, you almost could buy a little bit of each of them. These guys do more business in China. But I don't know if that's good or bad, right? I mean, if the trade deal goes through, it's good. If the trade deal doesn't go through, that's probably bad. So Caesars and MGM, I think, should be on our radars. Probably on the growth side. And I almost, they don't really meet our criteria for their turnarounds. Maybe I should just have a turnaround list. Here's what we know about turnarounds. They don't usually turn around, right? So we got to be careful with turnarounds. All right, speaking of turnarounds, Micron. Micron is a company that we've been buying the last couple of weeks. I told everybody they would bottom out around 30, and 30.91, 28.39. Wow. I put that article a little while ago. Let's see here if I can find it. Where is the Micron article? Micron just lowered the bar. December 19th. Talked about Micron. And this was basically their kitchen sink quarter, right? They announced everything. This is bad. This is bad. This is less than what we expected. They lowered the bar. It'd be much easier for them to lower the bar. I said, should take the stock price down to around $30 per share. Wow.
Yep, great call.
Yeah, I've been selling some puts, buying a little stock. You got your positive divergence now. You got your money flow turning up. Again, caveat, if the China trade deal goes through, this one's going to scream higher. If the China trade deal doesn't go through, it's going to bounce around for a while in the 30s. Might even go into the 20s. So just keep that in mind. However, somebody published a pretty good article on Seeking Alpha this week regarding Micron. And it had to do with the differences between them and Samsung. Yeah, this is still available for free. This is a pretty good article, right? So I would read Robert's article here, and I think he's got this one right? There's not this complete reliance in that oligopoly with Samsung and Micron and SK Hynix. There is some competition, and Micron has some definitive advantages. One, they're more focused, smaller company. They don't have to worry about making washing machines, so like Samsung does. So I think you get this focus from Micron, and I think they actually have slightly better technology in certain spots. So Micron, I think, you're gonna want. This is a pretty good article. I would read this one. I don't recommend a lot of other people Seeking Alpha articles, especially when they have a service. But this one qualifies. You want to read this article. So Micron could be on the verge of breaking out. So this is one where I think you have to own a little stock, sell a couple puts, and then use that put premium to buy some calls. And I don't know that you want to go out on leaps. If you already own some 2020 leaps, fine. But I think you almost want to play this one quarter to quarter and just keep rolling those cheaper calls. And you have to make that financial commitment to doing it. But there could be a quarter with China news to the positive side, or they get over this lowered bar, right? They lowered the bar, so now they don't have to jump over the bar. They just have to step over the bar. And I think you get that rally, 1 top, 2 top, 3 top, right? I think that's coming. So Micron, I think, should be on your list. We'll keep talking about it. But to truly understand that company, you need to read their presentations and then go to Samsung's presentations and some industry mags and really understand that DRAM is a big freaking deal. We're going to need more and more and more of it as we go to the smart everything world. This is a stock that we'll cover in the sustainable investing letter because it ties into all that stuff. And, so I'm going to create my own definition of sustainable investing, obviously, because I think that everything that's ancillary to the smart grid and alternative energy and water resources and agricultural resources and this resource and that resource. The technology is going to play into all of that. And Micron is going to be at the forefront of that. They have some very good technology that helps with artificial intelligence. That's kind of a big deal, right? So, hey, Dave, you can say something anytime you want,
Oh, yeah.
or grunt here and there. I know we're 45 minutes in, but I'll grunt here and there, be fine.
Right.
So anyway, Micron. Hey, look at this website. It's a pretty cool website. Quick thoughts on the solar multi-baggers. We talked about this in the service here this week. Pretty charts. Can't really read that. But basically what I'm saying is I was pointing out to everybody a week ago, look what's happening. Look what's happening. Look what's happening. So this is for solar. I think that, I think this coverage is pretty good. Like I said, Dave's got like 10 articles that he wrote that I have to just glance over and edit, and he's not able to post straight in here yet. He can help us working on that. But when my new website, Fundamental Trends, is up, he'll be able to post there right away, and then we'll just copy and paste over here. So anyway, we're talking about that right now. All right, exact sciences we covered. Crude oil. Let's finish up with crude oil.
Showing some strength over the past week.
Yeah, a little bit of strength, huh?
Mm-hmm.
I know somebody. I actually looked in the questions. Somebody asked about specific stocks, so I'll pull that up right away. So I'm going to tell you guys about oilprice.com. You've heard me complain about this website. As a news site, it's actually pretty damn good. But I've subscribed to their letters. Don't do it. Their letters are crummy. They have no analytical ability. They're just regurgitating stuff. They're chronically bullish. Their portfolio has been mediocre. And when you cancel, they don't really cancel you. All of a sudden, oh, surprise, there's a new charge. So these guys, you can look up the guys who run it. This is a great site. It really is. I mean, it's just a great aggregator site, and that's what you should treat it as. But read some of these articles, and then you go back to the source material. Okay, WoodMac says this. Okay, let's read the actual report, and that's what you should do. Okay, so when they link out to the stuff that they're citing, that's where your really good information is going to be. So if you take a look at some of the headlines this week, some interesting stuff. Saudi set sights on $80 oil. Hey, Dave, have you heard anybody saying that before?
Mm-hmm.
Who was it?
That was you.
Oh, it was me. Yeah, there you go. Yeah, come on. We have to work on your Ed McMahon. All right, we'll figure it out. So anyway, so there's still room to run for oil prices. Morgan Stanley is saying that the sell-off was overdone. I demonstrated that it had to do with money flows, it had to do with Trump tricking people, and I think we're at the end. If this government shutdown is any hint, any harbinger, I think we are at the end of the world kowtowing to President Trump. So keep that in mind. People will do what's in their best interest, and if President Trump doesn't acquiesce, there could be bigger conflicts. So we have to keep an eye on that. But, interesting headline here, China only to approve new solar projects if they're as cheap as coal. Interestingly, solar is the same price as coal right now. And with the new zinc air batteries, solar will be cheaper in the next 2 to 3 years. What does that say about coal? Coal's going bye-bye in the 2020s. Stuff that's already running isn't going to get taken down that quick. But solar with the new zinc air batteries is going to be, because lithium's expensive and toxic, but the zinc air batteries are a big deal. Have I mentioned zinc air batteries before, Dave?
I believe you did.
Okay, yeah. So we're going to be looking at zinc air battery companies too. There was a major breakthrough with the chemistry, I guess it would be, by that billionaire that made all the money in diabetes drugs. But others have the stuff too. Plus, flow batteries are getting really good. And there's a company right in my backyard in Menominee Falls, Wisconsin. That's right, I said Menominee Falls. Say it with me, Menominee Falls. MENOMINEE Onee. Menominee. Yeah, I think that's right. That's right down the street from Oconomowoc, Pewaukee, not too far from Mukwonago, and down from Wasaki. Got that? All right. Just making sure you have your Native American city names that are all over Wisconsin. And I know up in New Hampshire too, because went out to New Hampshire 10 years ago and 9 years ago for a wedding, showed up on a bus. I never do that again. Carl every time now. And I was sitting at a bar with some friends who were there, and bartender says, "If you can say the name of that lake out there, I'll give you a free drink." He put down on the he showed it to me. Say that word. I said Winnipesaukee. He was like, "How did you know that?" I said, "I'll have a brandy old fashioned." He's like, but yeah, I live in that land. In any case, take a look at oilprice.com right away. Not right away, but from time to time, they really do have good headlines. Most of their analysts suck, but it is a great aggregation tool and it's free. So keep an eye on it. And some of the stuff you have to throw out because it's just filler. But some of the things are important. The Saudis needing $80 oil is a big deal. And we already know that the drilling budgets for shale have been cut for the first half of the year. And we've been getting these reports for the last couple of weeks, which I talked about years ago on Market Watch. This will have to do with the shale slowdown. I don't have it up there right now. But the shale production 2-3 years after drilling are not coming close to meeting their projections from a few years ago. So what they told the banks that they were going to get in residual production in the out years 2, 3, 4, 5, they're falling short by between 10 and 30%. So that's why we have focused on oil companies that have good balance sheets and good rock. You can't be with the super high debt companies because the production is not going to be quite as cheap as we think when the volumes are taken into account, right? So
and the bad debt companies, they're the ones that are going to get killed or more risk of default during a downturn. Yeah.
I agree. And the trade there is not necessarily to short them because shorting is difficult, but when their secured bonds go to 60, 50, 40, 30 cents on the dollar, there you go. That's where you make your money. If you can get their bonds at 30 cents on the dollar, the secured bonds, that's going to be your trick. I did that on Chesapeake a few years ago when their first tier 1 debt got down to 35 cents, 25 cents. That's where I was buying at 35 cents. And, nice. It's basically trading at par now. So I tripled their money in bonds. That's ridiculous. So every now and then, and here's why those companies don't go to zero, because they still have an assets, right? So the bondholders get turned into shareholders. They usually get made pretty much whole or really close to whole. Maybe they take a 10 or 15% haircut sometimes, but it's really the shareholders that get wiped out, and they all cry and they all get a lawyer and they say, well, I should get something too. No, you as a stockholder, you understand you have no rights. You need a company that's going to really do well and pay down their debt and have shareholder return. So, all right. Freedom from OPEC, in quotations. Kirk. So, long time ago, and this is over on the Blue Mountain AM website now. Pretty tags, follow us. Freedom from OPEC is getting much closer. This is July 2017 in my annual freedom letter, which in July of 2018, I used my freedom to not write one. And so anyway, but I have a quarterly, my annual letter will be up Sunday night. So you want to come to bluemountainam.com, annual letter will be up. That's actually how I will be announcing the website to my clients. That's where they have to go to read the new letter. So pretty. I really like this website. And so Seeking Alpha gets it second. But I was talking about freedom from OPEC a long, long time ago. 2013 in July. Wrote a freedom letter. And freedom from OPEC occurs because of our production of shale and gas and getting into solar. We're there. 6 years later. Is it this article? It might not have been this article, but there's one on Market Watch from that time frame. So one of these articles back in 2013-ish, I said that by 2019 we would basically be an energy exporting country and we'd be completely free from OPEC. Yeah, we'll buy a little from them, but we don't need it. And really the only oil we're going to be getting from OPEC, I think by the end of this year, is the Saudi Arabian oil that goes to the Saudi Arabian refinery in Port Arthur.
Mm-hmm.
We don't, and the West Coast might get a little bit, but we don't need it. We just don't need their oil. Between Canada and Mexico, and maybe Colombia, and a couple other a couple of countries in this hemisphere, it's the only oil we're going to need. We just don't need Middle Eastern oil anymore, and that's going to be amazing. And one of the things that we're talking about is that the petrodollar is going to have a major change. Pretty soon, the Chinese are going to be buying oil from Saudi Arabia in yuan, right? And that basically breaks the old agreement on the petrodollar. However, if we're an exporter of oil, and distillates in particular, petrodollar doesn't disappear. It just changes its nature, right? Because when we were an importer of oil for many, many decades, for 4 decades basically, having the discount of getting to trade it in your own currency, which you print when you want to, is a huge advantage. Now that we're an exporter of oil, and in one of these Market Watch articles, I even say, I think it was in Strength Beyond the Balance Sheet, in one of my dollar articles in 2012, that we'll just tell the world, hey, make sure that when you buy our food or you buy our whatever you're going to buy from us, you buy it in dollars. Well, even though China is going to have a bigger economy by next year, here's where we predicted the euro collapse. Just for record, I've got a pretty good track record. Not perfect, as I proved in the fourth quarter. Strength Beyond Balance Sheet. And we'll finish on this. Read this article. I'm actually going to put this up in the chat. All these things that I said back in 2012 when everybody said the dollar was going to collapse still holds true today. There's some changes. The nature of the petrodollar is about to change. When I say about, maybe by this year, but I think probably by next year for sure. And I talk about in here massive U.S. growth. And I want you to think about this. I think I say it right in here that we could see prints of 4 and 5% GDP growth. The Federal Reserve is pulling out almost 3% a month out of the economy's finances. And we're still doing prints in the 2 to 3% range. What would GDP growth look like if the Fed hadn't been tightening? Would we be putting up 4 and 5% prints?
Possible.
I think we would.
Mm-hmm.
I think we would be. And I think if we need that money, I mean, think about driving up a hill, but doing it with your left foot kind of pressing down on the brake as you accelerated. That's what we're doing right now. This economy is so strong that the little pullback that we're going to get here, unless we complicate it with utter stupidity, should be just a pause that refreshes into the 2020s. And I don't think we get the next big one, the next big ugly thing, until way down the road when we really, hopefully we do it ahead of time. But our nature is to wait for a crisis to fix things. And there's going to be a major retirement crisis. I hope this little run-of-the-mill thing that we got coming, I hope we use it to do helicopter money and bail out the retirement system, because that would help finance the country for the next 50 years. And then we could do things normal-ish again. But who knows? Who knows how we handle it? In any case, I talk about in this article how the dollar was going to change as we become an energy exporter. We'll take dollars, please. We don't have to require the world to trade in dollars. They're going to trade in dollars because, one, we're the only trustworthy currency out there, as far as, on relative terms. They're all dirty shirts. Our dirty shirts just, pressed. But they're going to buy goods from us in dollars. And services. Our people are the best in the world at a lot of things, or among the best at a lot of things. So we're going to price our services, obviously, in dollars. So, and I talked way back about this, the millennial wave that's coming. The millennials are just about to become powerful financially next 3, 4, 5 years. So keep an eye on that. And they like sustainable investing. So if the money flows into sustainable investments, where do you want to be? So this oil trade is near the end. So somebody asked about Encana. Yeah, 60 Minutes Investor, plant life in the fuel. Yeah, there's some pretty interesting stuff out there. 800%. So an 8-bagger is an average. I averaged only 23%. I don't think that's right. Is Activision split with Bungie a big deal? I don't know. I haven't read up on that. No idea. Somebody asked about Encana somewhere in here, didn't they? Did you see that? Extracting carbon from the atmosphere is coming. I thought somebody asked about Encana, but I just want to show one oil company. I want to show the divergences here, and then we'll be done. Encana's rolling now. Yeah. I bet there's a positive MACD, and I bet money flow has turned up. Let's see here. Ooh, that's quite the turn up. That's a divergence. Look at that. And let's see. Here's the spot where the money flow turns up. Next day, price starts going up. When you get these huge drops in money flow, we have to really watch for those. What are those trough levels? Now, it doesn't mean they can't set a lower trough level, but there's actually a maximum on this, I think. Is it negative 50 is the maximum? I don't know. I have to look. But this is pretty low. I mean, look at it going back 10 years.
You can just wait for that to tick up a little bit.
Yeah.
For an entry point.
That's right. Just wait. I mean, if you didn't get this day, right, which is the perfect day, and you didn't get in until 5th day at 598, the high of the 606. So you bought at 606, the high of the day. You're still up 10% 6 days later. This is important stuff. And that's why I said at the very start of the show, webinar, whatever this is called, I have become a lot more impressed and convinced of the importance of this type of analysis. So we can know everything we need to know about the market. That helps us pick out the industries we want to be in. We can understand what the government is doing so that we don't fight the Fed and we don't let the government, do something that hurts our company. Like they're going to hurt Facebook eventually. And the fundamentals are important because you don't want a company that's run by idiots. But then the price only goes up when people are putting money in. So, you need to buy in these ranges here. And you can try to to speculatively buy it here, but sometimes there is no reason to think that Encana couldn't have gone into the threes. They could have. I mean, I understood the fundamentals, which told me it wouldn't happen, right? I didn't think that we'd break those levels. So we get a good turnaround here, and I've bought some more calls. I've sold some more puts. I've bought some more stock. And when all this stuff turns up, I still think Encana is going into the middle to upper teens, right around 20, 21, 22, 23 even. Because ultimately, this is a company that should get bought out. And a whole bunch of those Permian plays ought to get bought out or merge. And when they merge, like Encana just did with the Newfield, I think. Then they get all these economies of scale, right? They get to cut their rigs. They get to cut all these CapEx expenses. They get to operate on plots of land that are right next to each other, which is more efficient for them. So, and kind of got a great deal when they did that merger. So, I don't know if it's final yet, and I don't think there's any problem with it. But a lot of good things going on in oil. The Dirty Dozen oil stocks will be up on margin of safety investing and fundamental trends of this weekend. It'll be published publicly about a week later because we mostly have our oil positions already, so it's not that big of a deal for us to talk about them. But I think that there's a lot going on there. Dave is real big on, was it Devon Energy you looked at?
I know it's Diamondback.
Diamondback you looked at.
Ticker symbol.
FANG.
Ticker symbol is FANG, right?
Yeah. So, you take a look at this one and stop it here. There's my feed.
Making a recovery.
Yeah, see, look at that. Man, you wrote that article right in here, didn't you?
Actually, I was a little early.
A little early?
Yeah,
You're pretty close, though. Mm-hmm. So it's okay to be a little early when you publish to the free side because people aren't going to follow it right away. They just keep an eye on things. When I say something or you say something in fundamental trends or margin of safety, we got to be kind of spot on. We want to get people in there early like I did a couple months ago.
Right.
So, all right. Have a great weekend. We will be doing a show from the lovely Costa Hotel in Hollywood Beach next Friday. And I will have all sorts of content up because what I've been doing is stockpiling content so I can go on vacation. But we're going to have a lot of stuff up, and we're going to talk about the fundamental analysis for this year. And, we'll keep reviewing oil because this is a trade that's on right now. And we'll figure out when we have to exit this. The first thing we're going to do at some point is we'll get rid of our leverage, right? First thing we'll do is get rid of our leverage. Could that be March? Could that be June? I don't know. In that range is my guess. And then we'll have to figure out how to right-size our positions because we didn't right-size rightly last time. All right. WATT could be a big deal. Yeah, maybe. I don't know what they do. Antero. I don't know how long it'll take Antero to recover, but part of that article that I highlighted earlier from Wood Mackenzie. Stop it. I'm going to start telling them I'm not going to recommend them if they keep sending me that. Antero's getting an investment, right? Came down usually 2 to 3 times longer to recover than it takes to lose. Mm-hmm. So when does 10 turn into 20? Next year, maybe? Maybe? But it's a great long-term story. I like this company. I think that they make money. They hedge. The reason that I'm in this company is because they hedge so well. And I don't worry about them. I don't worry about them mismanaging their balance sheet. They have some debt. Okay. Here, not likely. Stop asking me. This is just a remarkable buying opportunity. And one of the things I'll tell you about Antero, they had a whole bunch of insiders and institutions sell. Insider institutions sell. Why? Because they got over lockup periods and they're old guys that were looking to cash out. And I've seen this with other companies before when people cash out. This is an unusual opportunity to buy Antero. So if you want one of the best natural gas companies out there, this is one of the ones to buy. All right. Have a great weekend. Hopefully you're somewhere warmer than I am right now, but next week, hopefully I'm somewhere warmer than you are right now or next week. again, if you happen to be in the Hollywood Beach area, Miami to Fort Lauderdale, give or take, and you want to hook up for a cocktail on top of the Costa, maybe it's called Costa, I don't know. Here, this is where we'll be. So if you want to come by, we will be right here by the pool. Yep, that's it. There's a little bar up there. We'll be up there. Come on up. Just let me know. All right. Take care, everybody. Have a great weekend.
Have a great weekend.
Next time, Dave talks a lot.
All
right. Take it easy, folks.